Hello viewers, and welcome to this evening's edition of Time with Your Banker and Financial Advisor, sponsored by Ecobank, the Pan-African Bank. With me today is Mr. Kweku Sapong Koram, and he is the product manager of Bank Assurance. We will be looking at Bank Assurance into details. Just stay glued to your seat. Don't go anywhere. Don't change the channel. We'll be right back.
Get ready to move on up with Ecobank. Easy access to your account wherever you are in the world. More ATMs across Africa than any other bank, so there's always one closer to you. The freedom to pay with a card instead of cash. To bank with your mobile anytime, anywhere. Or send money thousands of miles in a flash. Plus, smart ways to save and invest so your children can move on up too. And trust Ecobank to help with the things that matter most. Visit us online today and move on up with Ecobank, the Pan-African Bank.
Welcome viewers, and thanks for watching Time with Your Banker and Financial Advisor, proudly sponsored by Ecobank, the Pan-African Bank. I'm your banker, Betty Ayi. We are looking at Bank Assurance this evening, and with me again is Mr. Kweku Sapong Koram. Kweku, you can sport.
Thank you, Betty.
Hi, good evening.
Good evening, Betty.
I hope all is well.
All is well.
We thank God.
We're happy to be here.
Yeah, good. I hope you are prepared. I will not bombard you too much. Kweku, I know you are the product manager of Bank Assurance with Ecobank. What do you do in your department?
Basically, we are a department that has been set up to coordinate the bank assurance business on behalf of Ecobank Ghana Limited. And what we do is that we try and manage the whole business from the branch level to our engagement with the insurance partner as well. So it is like a one-stop shop for everything that's got to do with the partnership with an insurance company to offer insurance products for sale to our customers. So
you are looking at offering insurance products to customers as part of Ecobank's package?
Yes. You see, we are in a unique position as a bank where we see customers and we know what they need financially. So from time to time, what Ecobank tries to do is to try and develop products that would be to the advantage and benefit of our customers. And elsewhere, all over the world, banking and insurance go hand in hand. And it's high time, as our market gains sophistication, it's time for us to also move in that direction. And that is the reason why Ecobank has come up with a bank assurance partnership. So
whom are you partnering with now? Which insurance company?
In order to offer our customers the best available in the market, we needed to settle on a company that we believe would add value to what Ecobank do, because you know that Ecobank, the kind of name and the brand that we have in Ghana, we can't just partner with anybody at all. And we selected a company that has about 170 years experience in managing, yes, and that's Old Mutual Life Assurance in Ghana.
Old Mutual Life
Assurance in Ghana. That is the company that Ecobank selected for this partnership.
And what's into it?
What is into it is that Old Mutual will come up with products, and then the products that Old Mutual have, we have selected a number of them that we believe will be beneficial to the customers of Ecobank, and we have brought it under one space. So now when you are an Ecobank customer and you get up and you go to the bank, you don't need to leave the bank and now be roaming in town looking for an insurance company to insure yourself. At the moment we're doing
or anything.
No, at the moment we're doing life insurance only, and life insurance is differentiated from general insurance.
Yeah.
And that's what we're partnering with Old Mutual to do. So we've selected about 6 of their products and we have brought them under our space for our customers to be able to benefit from these products. What it means is that you don't now have to come to the bank and then go out to go and do insurance. When you are withdrawing money, that 5-10 minutes that you're spending in the banking hall, you can use the same period also to buy 1 or 2 or 3 of these products depending on what your need are. These are various products that tailor for the different needs of our customers.
And it is done at the branches?
Everything happens under the roof of EcoBank.
Yeah, in any EcoBank branch?
All the EcoBank branches are fully set up and in a position to offer bank assurance services.
Okay. And what products are available now?
Okay, at the moment, we are offering about 6 products, like I mentioned to you earlier. We have a mortgage life protection, which is basically a life insurance policy for people who have been given mortgages by the bank, such that once you pay your premium and the unforeseen circumstance of your death happens, then the insured event will trigger in and the policy would pay for your outstanding balance of your loan, so that whilst your survivors are grieving about your loss, they don't have to also worry their head over going to look for money to come and pay off the outstanding balance on your mortgage. We have a similar thing called a credit life that is for people who have been given personal loans by the bank. That is also meant to take care of these personal loans should they pass away. We just try to help customers and manage them financially, because you've come to take a loan whilst you are working, it's easy to pay. But when you pass away, most of the time we find out in our system that once the breadwinner is gone, the financial capability that he possesses whilst he's alive might not necessarily exist for the rest of the family or for the surviving spouse. And it becomes a headache for him or her how to now cater for these huge debts that may have been given to him or her. And that is why we've come up with a product like that. So once you take the policy, then you take the facility, we do the policy for you so that you can have your peace of mind.
Is it part of the interest that is charged?
It's not part of the interest, but it's a policy that you are entered into and you are aware that you are paying for that policy. So
you pay a premium on it?
Yeah, you pay a premium on it.
To the bank?
Yeah, to the insurance.
To the insurance company?
Yes, banks don't keep premiums. It's always, once you're paying premium under an insurance partnership, the insurance company is the one that is taking the premium, not the bank.
How about when the person gets incapacitated?
Yes, for the credit life, if you are declared medically unfit to work again, that would also come in and to trigger for it, because if you are incapacitated and you cannot work again as certified by a physician, then what it means is that you're not going to be able to work to earn income again. So how are you then going to be able to pay? Because it is from your monthly incomes that you're able to service your outstanding loan balance. So in that case, clearly, you won't be in a position to pay for your loan.
Is it 2 policies, or when you take one policy, it covers both death and incapacity?
For the credit life, it covers both.
Oh, okay.
For the credit life, it covers both, because there's a portion of, but all these things, it is subject to a certification by a medical professional that you are incapacitated. There's a status that is not subjective, it's objective, that somebody is medically unfit to work. It is not a subjective status, it is objective, because it is the physician who will declare you unfit to work.
Yeah, but the mortgage, that one?
Mortgage is only for life.
Oh,
because
okay.
yes, it's a mortgage life policy. It's a life insurance basically. Mm-hmm. So if you're no more and you have an outstanding balance on your mortgage, then it goes off. We have another product known as the International Travel Health Insurance.
International Travel Health Insurance.
Emergency International Travel. Basically what this does is that when you travel out of Ghana, you are most often at a place that is not your regular abode. Maybe you're going for holiday or you're going to do business. It is possible that whilst you're on this trip, you will be taken ill. When you're taken ill, most often you don't budget for being taken ill when you go on your holiday, because nobody wakes up and plans that I want to get sick.
That one is true.
When you're taken ill, you may have money back home in Ghana, but if that money is not readily available to you, how do you take care of yourself? You may not be able to survive that illness. So in order to manage this risk, we've come up with a policy where for a very little premium, you can have a cover of up to about 30,000 euros, which is mostly...
30,000 euros.
Yes.
It's very interesting, but we're running out of time. Viewers will take a short break. We'll be right back after this break. This program is sponsored by EcoBank, the Pan-African Bank, and Equity Assurance Ghana Limited.
Get ready to move on up with EcoBank. Easy access to your account wherever you are in the world. More ATMs across Africa than any other bank, so there's always one closer to you. The freedom to pay with a card instead of cash. To bank with your mobile anytime, anywhere. Or send money thousands of miles in a flash. Plus, smart ways to save and invest so your children can move on up too. And trust EcoBank to help with the things that matter most. Visit us online today and move on up with EcoBank, the Pan-African Bank.
Welcome back, viewers, and thanks for watching Time with Your Banker and Financial Advisor, sponsored by EcoBank, the Pan-African Bank, and supported by Bell Aqua. Yeah, KSK. Oh, I shouldn't have mentioned it because that one is between the two of us. Yeah, you said 30,000 euro.
Yeah, that is the maximum medical cover limit for our travel health insurance. So basically, if you buy the insurance and you travel and you're taken ill, it would cover your medical expenses of up to 30,000 euros. And
how much do you pay to earn so much? 30,000 euro?
How much you pay is determined by how long you're going to be gone for. So the longer you're going, then the more you pay. But the most expensive we have at the moment for people who travel a lot, we have a policy where you buy the cover for the whole year, but then each travel should not exceed 90 days. So it's like
that is
more, you can go multiple times, but each time you go in 3 months, you should be back, which is usually for most of these people who travel often, they don't even stay for more than 2-3 weeks. Yeah. And for that, you pay 380 Ghana cedi for the
just 380 Ghana cedi for the whole year.
For the whole year, yes.
To earn 30,000 euro.
Not to earn, but to
benefit,
to have the opportunity to be taking your bills to be taken care of to the tune of 30,000 euros.
And 380 Ghana cedis.
That is the premium you would pay
for the year
per annum. Yes.
But it's likely you may travel and you will not even fall sick. God forbid. Because
yes, but that is the whole point. But what if you also go and you fall sick? You may have
I'm
a
not
lot of money.
You shouldn't take the policy.
You may have a lot of money.
But we are not praying that people should fall sick.
No, certainly. Certainly. It's just to prepare for the unforeseen event and circumstance. So that is why then you have to do it. Yeah.
So you pay your 380 for the whole year. You stay not more than 90 days.
Yes.
And anytime, God forbid, you fall ill.
Whilst away,
you can access medical bill up to the tune of 30,000.
Yes, what happens is that when you buy the policy, we give you a card like our ATM cards look like. It's a small card. You have an international emergency contact number at the back. So when you are taken ill, all you do is that you just call the number at the back, or if you have been checked into a hospital and you give them the card, the nurses or whoever is assisting you at the hospital can do that and contact them that you are here, you have this policy, you've been checked into the hospital, and then they will take over and take care of you. Or you can also decide that you want to pay and come and claim it back. It all depends. It's flexible. It's at your convenience. Whichever way you think is appropriate for you as the customer, that is what we are there for you.
The bank wants you to be comfortable. So whichever way you think you are comfortable with, the bank will go by it.
In circumstances where they have to even relocate you from the hospital, that let's say you are in Ghana and you've fallen sick, you're a foreigner, you are falling sick and you are somewhere where the medical facilities available might not be that adequate to take care of you. They could come in and evacuate you to the nearest.
Oh, that's good.
Yes, so you may have checked into a clinic, but then the assessment is that you need, in our parlance, like a Kolebu type or a 37 type of facility to take care of you. Your evacuation will be dealt with such that you are made available at those facilities to take care of you.
This is a good policy that most Ghanaians must rope into, especially those on business trips.
Yes, and it covers, we have worldwide cover, so almost everywhere that Ghanaians go to, you would be able to access it. But it's an international policy in the sense that it takes effect when you are out of Ghana. Yes, and then when you're back.
So if you even go to Togo?
Yes, Togo is an international travel, you're fine.
Okay.
Yes. Once you're outside the borders of Ghana, you're fine. Okay. Yes, you can access it all the time. Also, we have another policy known as the transitional funeral plan. With the transitional funeral plan, we know how death can devastate us emotionally and can cause families all the grief. For some of us, in addition to the grief, whenever death happens in our families, there's also the added financial burden, which we may not have budgeted for or planned for, or even if we are budgeted for, we have a shortfall. So what we have done, again in collaboration with Old Mutual, is to come up with a transition policy. What this does is that you select a cover. We have a cover from as low as 1,000 Ghana and a cover that's as high as 50,000 Ghana cedis. And
you pay it up front? Or
no,
you can
in
spread
between
it?
We have about 18 different covers. You select what is appropriate for you, and based on your age and the cover that you have selected, every month there's a premium that you have to pay, which is fixed. And within the period that you're paying, should the life that you have covered, should you pass away, then Old Mutual would in turn pay you your cover.
But how long do you need to pay this money?
For a maximum of 15 years. But if before the 15 years, the person passes away, you can then claim for it. So this is how it works. As a primary applicant, you cover yourself first. So if I wanted to take a policy for my parents, for instance, I would take a policy for myself first. And then after taking for myself, I have the option to take for my parents. I have the option to take for my in-laws if I had any. And then I have the option to take for my kids. Each of these lives, you cover them. So each life would have its own cover that you would select. Everything is determined by yourself. And then based on the cover that you've selected and the age of the person, you would then determine the premium that you should pay. I'll give you an example. For people within my age band of 31 to 35 years, if you selected a cover of 50,000 Ghana, you would only be paying 21.29 cedis.
That is 21
cedis, 29 pesos.
29 pesos
every month.
Oh, okay. This is manageable.
You would pay this for a maximum of 15 years if you don't die within the 15. And if you did a little arithmetic now, you multiply this 21.29 times 12 times 15, you would see that it's not much money. And you're not paying it upfront, you're paying it every month.
But if you decide to pay upfront, how about that? You
could pay upfront, but the problem with paying upfront is that if the person, that the life that you've covered passes away before the 15 years, you would still refund the unexpired portion of what is left for you because the person did not live for that period. So you can do that, but usually it is better that you pay on a monthly basis because the person can pass. The only other caveat to it is that for lives less than 55 years, ideally we should have requested that everybody should undergo a medical exam before buying the policy. But we are not doing that. We've waived the right for everybody to go for a medical exam. So the other option we have selected is that if you are less than 55, you should pay at least 3 months. That is 3 months before. If you pass away, then the policy will be triggered. Even then, should you pass away by an accident and not through natural causes, it doesn't matter that the waiting period has not reached. You will still be paid.
That's the 3 months.
Yes. And by natural causes, I mean that when you are sick, you fall sick and you pass away. That is a natural cause. But if, for example, you walked into a bank, bought a policy, paid your first month's premium, and on your way home, your car had an accident,
God
and you
forbid,
passed
but
away.
when the unexpected happens.
Yes, and you passed away. It is not a natural cause of death. It is an accidental cause of death. And in that case, it wouldn't matter that you've paid your premium for only 1 month. You would be entitled to claim, and we undertake that we will pay for you.
Okay. What other products?
For people who are more than 55, we require that this waiting period is just for 6 months, and after 6 months,
that is those above
55. If you are above 55, then it's for 6 months. The policy is open to anybody whose next birthday is less than 70 years.
Oh, okay.
Unfortunately, when you are above 70 years, we cannot enter you into the policy.
Okay.
But
It's just
anybody
fair.
whose next birthday is 69 and lower, you can enter. So for people between the ages of 18 and 16,
And
if you are below
69.
18, the only way you can get onto that policy is you are a minor. So you would have to be entered by your parents.
Parent.
So the parent will then have to take it first and then
European.
European. We are not only interested in taking care of funeral expenses and when people die. What about when you are alive? It is not only funerals that make people need financial assistance, or financial planning is not only to take care of funeral expenses. So we have come up with another policy known as the Educator Plan. And what
But let me ask you a question. Suppose you run this up to 70 years and you pass on. That is when you can redeem.
Yes.
Okay.
No, the age limit I gave you is for entry, but it doesn't mean when you are in it already and you reach 70, you will fall off. No, once you have entered before your 70th birthday, it doesn't matter
So
how
if
long you grow.
You grow up to 100
when
years.
you pass away, we will pay.
Oh, okay. All right. Okay.
I hope that clarifies it.
That clarifies it.
Thank you.
You're talking about education plan.
Yes, education, especially tertiary education, is becoming increasingly expensive.
That one
and
is
it is
true.
something that
It's not only tertiary, the senior high also.
yes, it is something that most parents, that is why our parents worked hard anyway, that they should be able to take care of us and give us a sound footing in education. So we've come up with a policy known as the Educator Plan. And what this does is that it is to help parents to put aside some money gradually to build up an accumulated fund that would be able to take their kids
It's
to
the
university.
Okay.
So what we have done is that we have set up 3 different tenures for the product. There's 10, there's 12, and then there's 15 years.
Okay.
The rationale for staggering it this way is that our policy aims to make you comfortable by the time your kid reaches university age.
Okay.
And ordinarily, you reach the university age by the time you are 18.
18. Between 15 and 18.
18 years. So if you gave birth today and you wanted to start, then our advice to you would be that you should go for the 18-year policy.
Okay.
And the policy allows you to put aside, starting with as little as 20 Ghana a month.
A month.
But there's no maximum limit.
Okay.
You choose what your income makes you comfortable.
Yeah.
And then when you
And
give
what
it
you
to
expect at the end of
when you
the
give it to us, we invest and we accumulate it on your behalf. So if, for example, your child was 3 years now, then we would advise that maybe you go for the 15-year one. So by the time he's 18, which ordinarily he will be ready to enter the university, then the policy would have matured. If the child is a little bit older, maybe you could go for the 10-year-old
years.
policy.
And you talked about international travel health insurance. That is what we discussed earlier.
Yes.
And then your retirement savings plan.
Yes, I'm here to touch on the retirement savings plan.
Okay.
So with the retirement savings plan, again, like I said, various things require us to plan for financially. So we have set up different products that cater for different needs. With the retirement savings plan, you are working today, you are earning income. But for all of us, certainly there's going to come a day when we are no longer strong enough to go and to go and earn money. For a lot of us, if our salary delays for even a month or 2,
Trouble.
there would be trouble for us. So can you imagine when you are 60 and you're going to live to like 80, 85, 90. For another 25 years, you're not going to earn income.
But you earn your pension?
If 2 months, yes, the pension that you're going to be given by government is good. But what we think, and from where we sit, we have managed people and we've seen people who were very comfortable when they were working. And then all of a sudden, they retire, and within a few months,
to deteriorate.
They begin to deteriorate. So we've come up with, it is not in lieu of the government pension. The government pension is very important, but we think that we should add on, and we should encourage our customers to build on to that. So this is a lump sum policy. What you do is that for as little as 20 Ghana cedi a month, and there's no maximum limit. It depends on what you're comfortable with as an individual. You put aside something every month, we accumulate it and save it for you, invest it. Then when you retire, we pay you a lump sum. And we try, for most of us, by the time you even retire and you go through the paperwork to go and claim your SNIT, it might take time. But our policy is such that the moment you reach maturity, within a matter of days, your check and your account.
How is it different from Tier 3?
It is different from Tier 3 because this is supplementary and is voluntary, in the sense that you're doing it. We are not working under government. It's a private thing we're doing. So whatever we're doing is not in competition with the government pensions.
But Tier 3 too is voluntarily.
It's not in competition with the government pensions. We're trying to help you to set aside something and do something extra, so that at the time that you are not earning income.
And how much can you assess at the end of your term?
It really depends on how much you put aside on your own. To whom much is given, much is expected, they say. So if I'm able to put aside 50 Ghana cedis every month, and it is invested, you determine that.
Okay.
How long you want to go.
But your minimum years will be?
Each of our policies, you're going to go on retirement. So you look at where your age is now, and then you select. So for example, you could go for a 10-year policy.
Okay.
And then when the 10 years is up, because the lump sum, we're going to pay you once. You get your check, your account will be credited. And once your account is credited, you're at liberty to determine what you want to do.
So it starts for 10 years?
There's 10. What we do is that we have set the age limits, the upper age limits. So you give us your age, and then you tell us when you want to be paid your lump sum. Some people opt for early
retirement.
So that is set at 55.
Yeah.
So you can tell us that if I'm 55, I want the policy to cease by the time I'm 55.
Okay.
So if, for example, you started at the time that you were 30, and you said to us, I want the policy to cease by the time I'm 35, it means that you'll 55. Be doing the policy for the next 25
years.
Yes.
Okay.
You can do it and say you want it to end by the time you're 60. Okay. And then the maximum, when you're 65, we think that at 65, you should be able to assess it and then go and enjoy your pension.
Kwaku, it's rather unfortunate our time is up. Our time is up. What do you want to tell Ghanaians?
All our products are available across all EcoBank branches. So wherever you find an EcoBank branch, you can call in for further information about the products I have spoken about tonight. If you are not able to also walk to any of our branch, as we try to go digital, you can call our 24-hour contact center across all mobile networks on 3225, and there's a dedicated team of staff that is ready to pick your questions and to give you further information on all the products about bank assurance for EcoBank. Thank you very much, Betty, for having us tonight.
Thank you very much. Viewers, this is where we'll end today's episode on Time with Your Banker and Financial Advisor, sponsored by EcoBank, the Pan-African Bank, and Equity Assurance Ghana Limited, also supported by Bell Aqua. I'm your host and banker, Betty Ayi. See you same time next week on Time with Your Banker and Financial Advisor.